Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, May 21st, 2018. My beautiful friends, my beautiful friends. So what's going on right now? Well, in order to understand what's happening right now in the market, we have to look back to Friday. If you recall, Friday, epic bond buying like these were the last bonds to be had ever. It failed to prop up stocks. Stocks did nothing on Friday. Well, apparently, over the weekend, we got some good news out of China. There's some kind of a deal now. The trade war is now been pushed off or is put on hold or something. And stocks right now are higher. No. You see, this is the narrative that the mainstream wants you to believe is true. That stocks are higher because the trade war it's over. No more trade war. I say absolute freaking garbage. Stocks are higher today because they've managed to keep the 10-year yield under control. That's the truth. 3.1, 3.11 clearly has been a line in the sand. All of that epic bond buying managed to push the 10-year down. I just checked it before this video. It's 3.07. So for now, they have the 10-year yield under control. That's all the market wants to know. If they can keep the 10-year yield under control, stocks are going to go higher. Period. And you can see, as I am doing this video blog, stocks are up about 300 points. I bought calls on SPY this morning, 2 weeks out in the money. They're up right now. Now let's address the yield curve. The yield curve is an element that is going to continue to be ignored as long as they can keep that 10-year yield suppressed here. The spread now between the 10 and the 30 is 13.5 basis points or 0.135%. It's insane. You got to be nuts. So, oh yeah, sure. I'll lock up my cash for 20 more years for a 0.135% more cash. Are you kidding? Really, seriously. So I don't care what the Confederacy of Dunces over there is trying to force feed or fist feed you. I know you're laughing at this because this is all about the 10-year yield. I've been telling you that exact thing for like weeks now. It's all about the 10-year yield. They can keep it under, now we know what the line is, 3.1. That can move around a little bit because of dollar strength. Again, I went over how there's almost like this seesaw effect going on. If they can control the dollar, meaning keeping it weak, and they can keep that 10-year yield below 3.1, boom, stocks are going up, period. Something else real quick I want to cover with regard to these markets. If you notice, you've seen crude oil going up lately. This is, for the most part, I know this is going to sound counterintuitive to most people, stock market bullish. Why would that be stock market bullish? Well, I've covered this at length. The major Wall Street banks, the major banks around the world have massive investments in crude oil. So you're going to hear this narrative too from the mainstream, and it's laughable that the price of crude oil goes up because OPEC, they want to maintain a certain price. Well, of course that's true, but it also has to do with the bank's investments in energy and in crude oil itself. It's such a scheme. If you could just lift up the hood, look underneath there, and you're going to see what's lying underneath. It's disgusting, but it's really the truth. And we can take advantage of all this, and that's, I hope, what you are doing right now. All right, so in summary, if they can keep that 10-year yield under 3.1, they can keep that dollar weak, they can keep crude oil high, stocks will move higher. It's very simple. They're going to ignore the yield curve until they can't ignore it anymore. And I think, again, when it hits, and it will, it's going to obviously move around a little bit. It's not going to continuously go down or continuously go up. I'm talking about on the long end of that curve. But once it hits, 10 basis points, the mainstream is going to have to start talking about it, in my opinion, and it's going to be interesting. All right, with that said, hope this made sense to you. I'll see you at the end of the day.